Hello, 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 everyone. Y'all come on in, come on in. It's Simone Kason. It's your cash counselor, your money problem solver, the dopest chick on your timeline. Why? Because I'm usually talking about money, stocks, and weed. Y'all, today ain't no different. Make sure that you subscribe to the YouTube channel at which is C Simone Kason. Make sure that you get on Anchor to listen to the podcast. You can follow me on all social media outlets at cSimoneKason.com. If you are watching me on YouTube, do me a favor. Make sure you hit the word subscribe and leave something in the comments to let me know where you're coming from or how you feel about the video or what you think. Right? So this is going to be a pretty short video, not going to take up a whole lot of time. This is how to build a profit-making portfolio. And so we're just going to talk about some best practices on how you can be able to do that. I'm not going to take up a lot of your time. We're going to jump right in. So first things first is that this is a portfolio that you're actually going to be managing yourself, right? So, most of us have our retirement accounts and they're usually managed, but they're usually an option that's there that will allow you to kind of make changes. It's federally mandatory that portfolios have at least three different types of funds that you can actually participate in, but you can usually change that allocation, and we'll talk more about that. But even if you want to start managing an outside retirement account or invest in trade, then these are some great ways for you to be able to do it. All right. So first things first, the first thing that you need to be able to do when you start to invest in trade, and let me back this up a little bit so you're not cutting off my head. I'm looking at this. Is the first thing is definitely is trust, right? So you have to be able to trust the investment that you're getting in. So whether it's stocks, bonds, whether it is uh, real estate, whether it's gold, whatever it is, you have to have the trust that it's going to create a profit, that profitability is not only available but is sustainable in that. If you don't have that form of trust, then you're going to definitely make decisions that are based on emotions because you don't trust it, right? And not based on having good decisions. So that's going to be that. So first thing that you got to do is you got to have trust. Second thing that you're going to have to do is that you're going to have to educate yourself on where it is that you want to be, right? So what's your goals? What's your risk tolerance? What is going to be the investment strategy? So all those things are based on education. So the first thing is definitely trust. Can you be able to achieve and sustain profitability in this actual asset or however you plan to invest? The second thing is going to be educating yourself. And while you're educating yourself, what is your risk tolerance or your risk appetite, which is going to include your risk capital, your risk aversion, and your risk tolerance. Also, what are your goals, which is very, very important. And then last but not least, what kind of strategy you're going to have. Then the third thing is implementing an investment strategy of some sort. So you have to be able to implement a strategy. If you're not implementing a strategy, that definitely holds you back from actually making great decisions. So whatever that strategy is, you want to make sure that you stick to it as long as it's working and as long as it meets your goals. Okay? So that's very, very important. So let's break that down. We broke that down into those three different steps. What does that look like for a newer investor? One would be definitely understanding your asset allocation. Asset allocation is pretty much the assets that you decide to put in, but how much money you decide to put in. And so what that looks like is, so you may have an asset allocation of moderate, right? So 50-50. Moderate means that you like 50% risk, 50% reward you're willing to do, right? So let's say that maybe 50% of your investment was in stocks and 50% was in bonds. Why 50% in stocks and why 50% in bonds? Because stocks are going to be a little bit more riskier and have a little bit more volatility than bonds, which bonds are going to be steady and they're going to issue you interest. And as long as you're investing in a company that has a good rating and they have a decent coupon rate, then you're going to be able to get that money back plus the interest in bonds. Okay, so asset allocation is important. What else is important in this? Are you, your mindset? Are you ready? That's really, really important. Are you ready to be able to be an investor? Investing is a privilege, it's not a right. So, do you have a steady income? Do you have emergency funds put away just in case something happens? You don't have to sell at the wrong time when your assets are down. And then, last but not least, um, do you have a steady income? Oh, and have you limited your debt? That's real, real important. So limiting your debt, steady income, and emergency fund are going to be those three that you definitely need to create a profitable portfolio. And then last but not least, making sure that as your lifestyle changes and as you change, that you learn how to rebalance. And rebalancing is just simply making sure that um, while your portfolio is 50-50, either if we're still in the same place, we keep it 50-50. And the reason why you have to rebalance is because there are going to be times when you are going to be able to buy more stocks than you can buy bonds because of the price fluctuation. So you want to make sure that you're rebalancing so that you're always staying in that 50-50 if that's your lifestyle and if that meets all of your requirements. But if your lifestyle changes and things change for you, then that is an ideal time for you to go in and rebalance. So rebalance that number, right? Go in and rebalance that number. So if your lifestyle changes, if your goals change, if your objectives change, if your risk tolerance changes, then rebalancing your portfolio is important too. All right, so this is a quick tutorial on how to create a profit-making portfolio. Definitely, please follow me at csimonecason.com. Make sure you hit the word subscribe here. Also, I would love for you to, if you're interested in taking our classes, you can always go to www.csimonecason.com and then go to shop now. That will allow you to be able to take our courses. And then, of course, you can join our money team and our newsletter. And there's a place that says sign up. So I look forward to talking to everyone soon. Have a great day. And this is C. Simone Cason. Hit the word subscribe. Please check out our next video that talks about investing. Thanks.